G'day folks, welcome back to another update on natural gas. Now the price has gapped up over the weekend, as it sometimes does. We'll get into the charts in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook first off, today February the 10th, 2025. Natural gas demand is experiencing significant growth driven by rapid expansion of AI data centres requiring substantial energy. The increasing energy needs of AI data centres are projected to boost natural gas demand by 3 to 6 billion cubic feet per day by 2030, underscoring the importance of natural gas in supporting technological advancements. ProShares Ultra Bloomberg Natural Gas (BOIL) seeks to provide twice the daily performance of natural gas futures, while ProShares Ultra Short Bloomberg Natural Gas (KOLD) aims for twice the inverse daily performance, making both suitable for short-term trading strategies. The United States Natural Gas Fund (UNG) tracks natural gas futures without leverage, offering a more conservative approach. Investors should exercise caution with BOIL and KOLD due to their leveraged nature and potential volatility decay. Over the weekend, natural gas prices experienced a sudden rise, primarily due to the implementation of a 10% tariff by President Trump on Canadian energy imports, effective February 1st, 2025. This policy change has led to increased costs for imported natural gas, contributing to the price surge. First, we look at the natural gas commodity price, and we always look at the long-term trend. So we look at the monthly, the weekly, and the daily. So first off, on the monthly, we've got the CCI 150 is above its moving averages, and so is the price above its respective moving averages, giving us a bullish breakout. So just to be aware of that. These moving averages, by the way, for those new to the channel, are available in the description below if you want to learn how to draw them on your own charting software. On the weekly, it has been bullish for some time, but notice last week we dipped into that moving average range, giving us a somewhat weakening signal, neutral positioning. At the moment, it's a fresh breakout this week so far today, breakout to the upside, giving us a bullish trend. So both bullish on the CCI and the moving averages of the price chart on the weekly. On the daily, we've got a lot of lines drawn here, and that's deliberate. No apologies for that. We've got a diagonal ascending trend line and a diagonal descending trend line, and also this minor support here at 32.16. Now you'll notice there the price has been gravitating towards those two trend lines. It came halfway down towards this one initially, but then it bounced towards this horizontal trend line in the short term. At the moment, the price is making further upside, and that's in a almost just fresh breakout above that moving average on the price. But notice it's already broken above the CCI, giving us a fresh bullish break on the daily signal. Now if you go to the intraday charts, and we always look at the intraday, even if you're trading on the daily, we'll look at the intraday to see if there's any minor or micro trends or changes potentially. Now, or if you're trading on the intraday, you can interchange this with 2 hour, 4 hour, etc. I've got the 1 hour here to demonstrate. And what we had back here, for example, we had a couple of bullish divergence versus lower lows on the price, and it bounced, and each of those hit their respective targets. This one actually broke right through that target range, and it broke up. If I drew a Fibonacci on that one went up as far as, let me just see how far it goes. Yeah, went as high as the 61% level when it broke up from that area, gap through there. Now overnight, over the weekend I should say, we had another bullish break to the upside. Notice it was bearish. Now we've got a bearish divergence as well, just to be aware of. If we drew a trend line initially to that area, but notice it's actually extended to that, so that's still a continuation of a bearish divergence. Take the same area on the price chart, just continue it on. That's a lower highs on the CCI versus high highs on the price. So that's still a bearish divergence. Now it could have possibly completed the divergence here on that little dip there. So if we drew a Fibonacci, if we took it from that high to that low, you can see there it bounced down to the 50% level. So that could have potentially completed the divergence. Now, that's still a bearish divergence, but will invalidate the divergence if that breaks higher than that area there. So just keep an eye on that, but that's still a bearish divergence. In other words, we may see further declines in the near term. So for BOIL, on the monthly, it's very bearish, below its moving averages on the price. There's no CCI for on the monthly. On the weekly, we've got this bullish divergence, and that's still pushing higher with lower lows on the price. Now notice it's actually broken higher than that moving average band, but it's also pulling back towards that moving average band as well. So just be careful. It may actually break lower possibly. It might, like it did back here. I'd like to see it break a lot higher and to continue with another new high above that area to be more bullish. But at the moment, cautiously bullish on the weekly. On the daily, we did draw this support at 35.98 and resistance at 80.01. It bounced between that. Now in this case, it broke below the moving averages, giving us a bearish signal initially a few days ago. But in the last few days, last week, it actually broke through that moving average band. I've got a fresh breakout above that moving average band on the CCI, and it looks like it possibly may had a slight break above on the price chart as well. But today so far we've got a bearish candle, so just be cautious. We might see a bit of a pullback on the price. Now go to the intraday on BOIL. Again, cautiously going long at the moment. We've got I would consider that a double top on the CCI versus slightly higher highs on the price, and that's I would call that a bearish divergence. And that's already on the hourly chart. It's already broken down below the moving averages of the CCI and the price. So again, if that was to break as a minimum retrace, you would draw a Fibonacci in that range between before that started previously. You can see there it's already hit that minimum 23.38% level. That's our minimum retrace level. You could possibly bounce out of that, or if it breaks lower, then it's a matter of seeing where it falls. And if it breaks below the 61%, then it's going to be further downside to be looking out for. But at the moment, one step at a time. Bullish on the daily, broken down on the hourly. Now notice as well, it's gravitated towards this ascending trend line. So again, if it breaks out of this target area, then the next level of support or resistance may be at this diagonal ascending trend line. So I'll keep an eye on it. But at the moment, bearish outlook so far on the hourly. For KOLD, that's actually it's been broken down now second month on a bearish outlook on the monthly. There's no CCI for it on the monthly chart, but bearish outlook on the monthly. On the weekly, it's been bearish for some time. Had a bit of a pullback slightly in the last week, but so far this week it's actually broken down again, giving us a continuation of a bearish outlook. On the daily, again, we've got this support down here at 27.80 and a resistance at 85.10. It bounced off that support. We had a slight bullish movement on the daily chart, broke above on the price chart as well. But then it broke down a few days ago below that moving average band on the price, and it's a fresh break to the downside on the today. Well, actually, it's actually broken up again. So it's actually today. It's actually in a neutral stage. On Friday, it was a bearish outlook, but today it's neutral so far in that moving average range of the CCI. So just cautiously looking at that from a neutral positioning on the daily. Now, if we go to the intraday charts, I'd avoid taking long or short trades at the moment until we see this decisively break above or below that moving average on the daily. But at the moment, the hourly is broken above the CCI, a very narrow CCI on the hourly CCI chart, and it's also a fresh break above on the hourly of the price chart as well. But again, I'd like to see that break higher on the daily to be more confident of going long on the hourly chart. Notice here as well, we had a strong break to the downside from our last update, and that caused this break into that moving average range on the daily, and also broke to the downside of on the hourly chart. Now, when this happens as well, just as a tip, I'd like to see a fresh breakout on the CCI and the moving average of the price. In other words, this is broken down, it's a gap down too far, and generally that's probably too late to get into the trade. In other words, I'd like to see a fresh breakout, for example, like it did back here on a long positioning. I'd like to see a fresh breakout on the CCI there, and also a fresh breakout on the price. That's an ideal area to go long, and you would have made a nice little gain on that one had you gone long there. This one seems to have taken most of the profits if you're going short. So again, I'd like to see this. So that there would have been another area to go short. Fresh breakout on the price, fresh breakout on the CCI, and you would have taken a short position on that candle, and you close it out when the CCI breaks into that moving average range. So you would have made 2.4% gain in 11 hours of trade. Now looking at UNG, now UNG's broken up past the moving average of the monthly CCI, but notice the very narrow range, and notice also the price is still below its moving average, so very cautiously neutral to bullish move on the monthly. On the weekly, that's also showing a bullish divergence versus lower lows on the price, and again a slight break to the upside above the moving average of the price on the weekly. Again, I'd like to see this break those previous highs and continue an upward momentum to be more confident of a bullish move on the weekly. On the daily, we had a support at 1236 versus 2002 on resistance. Broke down. It gave us a short signal a few days, or about last week would have been. It broke into the moving average range, and now it's a fresh breakout to the upside on both the CCI and the price chart. Going to the intraday chart, and today notice from our last update it broke up, gapped up. So again, I would not have taken a long trade on that one. It gapped up too far, pulled back, went short for a short period, then it broke up again, and that would have been an area to go long on that period there. And you would have closed it out at the close of that candle. That gave you a 1.26 gain in 11 hours of trade. Now notice here as well, it's broken below the moving average band. You could possibly take a short trade, but notice the daily's going long, so just be cautiously. I'd probably avoid going short until we see this break a lot lower on the daily as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.